that assessment that Palantir is cheap. What would you say to those naysayers who talk about obviously the lack of profitability and of course that big issue, which is the stock-based compensation?
Okay, those are great questions. So let me address those before I get to my point why I think it's cheap. So about the stock-based compensation.
Hello everyone and welcome to the Investing Experts Podcast. My name is James Ford and I'm joined today by fellow essay contributor Victor Dergunov. He's the financial prophet on Seeking Alpha and he has a very well diversified portfolio of stocks and financial assets. Today we talked about various different stocks, tech earnings, the future of Bitcoin and also the macro outlook. And of course, you can follow me on Seeking Alpha, the Pragmatic Investor. Please enjoy the conversation and don't forget to like, share, and subscribe. Thanks for coming, Victor.
Thanks for having me. I'm very glad to be here.
I will say I would like to congratulate you because you've done quite well, I believe. I mean, at least from my point of view on Seeking Alpha, you've amassed around 40,000 followers, I believe.
Yeah, that's true. Yes, I believe it's close to 42,000, and my goal is to hit 50 by the end of the year. 50,000 followers, and if anyone told me that I would have 50,000 followers 5 years ago when I first started writing on Seeking Alpha, I would probably say you're crazy. But nevertheless, here we are. Because back then I had like no followers, and I would look at people who have 5,000 or 6,000, and I would say, "Wow, they have." These guys, they have a lot of followers. And now, like you said, I have around 40,000.
I wanted to know, in terms of investing, because I have read a lot of your pieces, obviously, you're often taking up space there on the trending, so I often encounter your pieces there. And you do write about quite a varied topics. Just in general, what would you consider to be your investment ethos, your style?
I think the most important thing is to be diversified, well diversified, and also you want to rotate at the right times, because the market is continually rotating from one sector to the next. You want to go with the market. You never want to go against the market. Obviously, you want to go with the wave. So diversification, rotation. I also like to trade a little bit around the peaks and troughs. This is done mostly during volatile periods when the markets are calmer. There's far less rebalancing and trading involved. Also, I use this strategy, this covered call strategy, to increase yield and improve portfolio performance. Aside from that, I think it just comes down to picking really good companies that you believe in. You have conviction in, and you understand the business more or less, because investing in something that you have no idea what they do is probably not the best idea in the world. So I mean, that's just several things that are, I guess, how did you call it, the investment ethos?
Yeah, something like that. Okay, so a diversified approach. I do. I've been personally looking at different option strategies. I do quite like that idea of the covered calls.
Also the collar play we use quite often during when it gets really volatile. We layer a put on top of the covered call, and we turn that into a collar play, and that's really worked out well during in last year. It was working well.
Could you explain for the listeners how exactly a collar play would work then, or maybe a quick example of it?
Sure, absolutely. So let's say you have a company, any company. Better to have a company that's higher alpha, something like like an AMD or an Nvidia or a Tesla. Let's take a different company. It doesn't really matter which company XYZ that's going to report in a week or so. And we want to protect our investment, correct? So what we would do is we would sell a covered call option, and then we would take that premium. Say we would get. I usually like to go 4 to 6 weeks out for the expiration date, and I usually go for the strike that's slightly out of the money. So say we get about 5 or 6% for our premium for our covered call. I would then take, either that whole premium or part of it and buy put options with it to further protect our position. And that's the collar play right there. Some people say, oh, a collar play, it sounds difficult or it sounds complicated, but it's really not. You're just selling covered calls, and then you're just buying puts with the with the premium. That's basically it. Okay. So after you buy the puts, say the earnings come out, they're not so good. The stock drops by 10%. If you have the right puts on, you could get a threefold, a fourfold, or a fivefold on those puts in a few days. If the stock falls by 10 or 20%, so those puts can appreciate quite quickly.
Of course, but of course, if the opposite happens and then the price goes up, then you would, of course, be forced to sell your position, right? Or the calls.
Yes, if the price goes up, then then you're going to lose. You're not losing anything because to buy the puts, you're using the money from the premium. So you're not actually losing any money, but then you're losing upside potential on the stock. Yes. Mm-hmm. That's true.
Right. I noticed a lot of the company just mentioned, NVIDIA, AMD, Tesla, all of these, of course, some of the big tech names, and of course, very relevant now because we are pretty much into that tech earnings season. I think any particular ideas or positioning behind the current earnings?
Yes. So I like to start by looking at the banks, of course, because they're usually the first big companies to report. Often, a lot of the times, if the bank earnings are good, most other earnings are good too. If the bank earnings are bad, there's a good chance we're going to have a bad earnings season. Now, so far, despite some challenges in the banking sector, we've had the Silicon Valley Bank go under, and there's some concerns about Charles Schwab now not going under, just concerns about losses in their bond portfolios. They call it, I believe. Mm-hmm. Basically, I think they have a lot of derivatives on their books that are worth a lot less than they claim, and it's not just Charles Schwab. It's many banks. It's similar to what happened in 2008, but I don't think it's anywhere near that magnitude. Just because of the regulation that's been put in place, but the greed is no less, of course. But I don't think we're in the same situation that we were in 2008, or even a similar one. So I don't expect big bank failures or anything like that. But we are seeing some issues, and nevertheless, so far the banks, J.P. Morgan actually had great results, and the stock flew. Other banks other big banks like Wells Fargo, Bank of America, Citibank provided pretty good results. So I don't see anything that that troubling regarding this earnings season. Yes, we're going to have a little dip in EPS year over year, and some companies are going to have revenue declines year over year, but that's normal in the slowdown. So this is to be expected. I don't think we're going to have a terrible earnings season as far as tech goes. So we saw Tesla report. Tesla stock sold off, but the earnings they really weren't that bad. It was just a slight miss on revenues, and that was primarily because of the price cuts. So I suspect we're going to have a decent earnings season. But the thing is, stocks are in a tough spot here, because even the decent earning, even if you want to call these earnings decent, and I guess they are given the whole macro situation, there's a lot of uncertainty ahead. So I'm a little concerned what's going to happen after earnings, because I'm focusing on economic data, and a lot of data has been worsening. Mm-hmm. It's good that inflation is coming down, but there's a lot of housing data, and there's a lot of troubling consumer related data. Mm-hmm. And and the economy is mostly consumer based. I'm sure it's like 70 in the US. It's like 70% consumer based economy. So if the consumer starts to, consumer sentiment, if it continues to sour, and if the labor market worsens. So if we get that double whammy of relatively high inflation, along with the consumer feeling the pinch from the higher interest rates, higher borrowing costs, we're probably going to see quite a bit of slowdown, and we're probably going to see the labor market worsening in the coming months. So I don't really consider these earnings that important right now, just because there's so many critical factors after that that are going to influence stock prices more than these earnings probably will.
Yeah, I think that seems to be a bit of a consensus at some point. I mean, in general, analysts have been talking about this recession for quite a lot of time. It hasn't quite materialized, but as you say, we're starting to get that evidence. So I think I was reading today some analysts by Wedbush, I think, talking about the idea that the earnings today or the earnings that come out this week won't be so bad. But of course, looking perhaps at that forward guidance, that's when, companies are going to start saying, well, watch out, because in the next 6, 12 months, 3, 4 quarters, things are going to slow down substantially.
Yes. Forward guidance is certainly the thing to watch during any earnings season, but this earnings season especially. And I also want to just add that I believe if we take away, I guess, the part of the economy that the government supports, let's call it the government side of the economy. If we separate that from the actual commercial business side of the economy, I believe the business commercial side of the economy is already in a recession. Mm-hmm. It's the numbers don't scream recession, or haven't screamed recession, only because the government side of the economy, I guess the government has been propping up the economy basically. Mm-hmm. But I don't know how long the government can continue to do this. So we're probably going to be in an official recession this year.
Okay, so
the question is how deep is it going to be? Because a relatively shallow recession shouldn't hurt stock prices too much. And maybe we might have seen the bottom at 3,500 SPX, or we may see it a little bit lower at 3,200. Possibly 3,000. But if the recession gets deep, then all bets are off, and only time will tell how low stocks will go.
Mm-hmm. Yeah, absolutely. This also at a time where I believe you're probably already aware of this, but over the last few months, especially tech stocks really have been carrying most of the indexes higher, right? So if you actually look at of how they're priced, in terms of a forward PE, the valuations are getting very rich right now, and as you say, there might not be a good reason to justify that moving forward.
Yes, that's very well said, and what I can add to that is that yes, some companies like Nvidia and AMD and several others have really just have had massive rebounds of 100% or more since their bottoms, and their valuations, like you said, they're getting pretty high again. However, we're looking at almost like two different economies, because if we look at a company like Google, for instance, Google is very cheap right now. It's only trading at like 16 times forward earnings. Mm-hmm. My opinion, I believe it's because future earnings are uncertain in companies like Google, because there's a lot of ads, there's a lot of ad spending going on and things of that nature. So investors are I guess they're skeptical about bidding these kinds of stocks up. These kinds of stocks up too high, but Nvidia and AMD, they're getting most of the and other semiconductor, and of course stocks like Tesla too, and just many different stocks are getting lots of bids, and they're getting too expensive now. Yes, I definitely agree with you. But there's also I also want to emphasize that there are a lot of quality companies that are not expensive right now. So it's a strange market we're observing here.
Mm-hmm. Yeah, I definitely agree with you on both of those points. The idea that yes, we are heading into a recession, but also that perhaps some of these companies do offer a significant value. I mean, you recently had that call out on Tesla, which you're still rating as a buy. You mentioned Google as well is
Sure.
probably a decent buy at these levels. Would I be correct then in saying that your overall assessment is that if we do get a bit of a sell off, you're looking basically at building positions, if it goes down from here, sort of playing it more into the long term?
Yes, absolutely. I want to throw Amazon into that mix because that's one of my favorite companies. I also want to give a shout out to Palantir. That company gets a lot of hate, and that company is cheap. And that company, in my view, is going to be worth a lot of money one day. That is an underrated company. That is a company that's just filled with the best talent that there is in the world, in my view. And they're doing things that are amazing, and there's essentially no competition. So, I mean, that's a company that I want to own. That's my biggest position in my portfolio is Palantir. That's a company that I want to own for the long term. I don't care if it goes down to $5 because I'll buy more at $5. Similar story with Tesla. I mean, I've owned Tesla since 2013. That's been one of my best investments over the years. Of course, I've adjusted the position, many times. It's been 10 years, but I've been long throughout most of the time. I'm long Tesla now, and if I get the opportunity to buy it at 150 or lower, I'll buy more at 150 or lower because I believe in these companies long term. I think that they're going a lot higher. Same thing with Google. I think it's a great buy here. If it goes below 100 again, 90, 95, excellent. I would love to buy more. Amazon, same thing. And we can go down the list. There are many great semiconductor companies. NVIDIA is expensive, but if it ever goes back to $100 again, I'll back up the truck. And AMD, same thing. If I ever see that anywhere near 50 or 60, I'm backing up the truck there as well, of course. So I don't think we're going to see those prices again. I don't think we're seeing NVIDIA at 100 or Tesla at 100. I think those are behind us. I think those were bear market bottoms. And I know that during a bear market phase, it's, some people like to be overly, or maybe they don't like to be, but they just are overly bearish, I guess. And I've lived through a couple of bear markets, so I've seen this. I'm not saying that we've seen the bottom, we've seen the worst, but I think that future sell-offs will bring buying opportunities. I don't think the world is going to end. I hope it's not going to end anytime soon. And also, I don't think that that good companies are going to stay down for a prolonged period of time. Like, just take a look in retrospect what happened to NVIDIA. 100 to 120 was the buy zone that I was recommending. It went into that level and then it just exploded higher. Same thing with Tesla, around the same area I was recommending. 100, I think it hit exactly 100 or whatever, like around 105 maybe. And it's, like doubled since then. Of course, it's been volatile and we're going to see volatility persist. But my point is that you see a great company that's down, that means that there's blood in the streets, and it's probably time to buy.
Mm-hmm. I wanted to take you back on something you just said that, of course, a lot of people might consider a little bit controversial, which is that assessment that Palantir is cheap. Now, I've written about Palantir before, also, kind of switching a little bit from kind of more bullish to a bit less bullish, but generally also kind of appreciating that the company has something special. But what would you say to those naysayers who talk about obviously the lack of profitability and of course that big issue which is the stock-based compensation? Or just why would you say, what metrics would make you say it's cheap? How is it cheap to you?
Okay, those are great questions. So let me address those before I get to my point why I think it's cheap. So about the stock-based compensation. So lately, I don't think that most people go through like the 10, like the financial reports, like I do, as probably as closely. And I'm not saying that no one does this. I'm just saying that normal people probably don't do this. Okay, so I'll just tell you what I see when I look at Palantir, and I've looked at their reports and their books and their quarterly reports very, very carefully. There were concerns about dilution, and just about any company that goes, that initially goes public, there's some dilution. Palantir shares got diluted at first when the company went initially IPO'd. There was arguably some excessive stock-based compensation, when the company first went public. However, it's been around 2 years since Palantir went public. So if you look at it now, so the stock-based compensation, it's much less relative to what it was before. And there is minimal dilution, in recent quarters. Now, as the company's revenues continue to increase and increase and increase, that stock-based compensation, in percentages will matter less and less. So I'm not concerned about the SBC at all here. And what was the other one about the? You had the question about the SBC and the lack of profitability. Actually, Palantir just last quarter was a GAAP profitable quarter,
right?
Not not a non-GAAP GAAP profitable quarter. So I mean that's a big deal. So I mean that right there illustrates that the company, it can certainly be profitable, because right there, I mean, it was only $0.01. It was only 1 cent in EPS, but it's a GAAP profit nevertheless. So I mean, obviously, the company can be profitable. Now, why I say it's cheap? I say it's cheap because the revenues, they keep on growing. The market cap, it's not increasing anymore because the stock price, it's not going up, nor is there dilution going up. So the market cap, I think, is somewhere around like 17 billion, maybe 16, 17 billion now. And so Palantir is trading at like maybe 6 or 7 times forward sales. While that may sound like, I guess, like it's not cheap, there are not many companies in Palantir's position that have such a long growth runway. So Palantir can probably continue to grow revenues at double digits for many years. So possibly a decade or longer, we could see Palantir. Obviously its growth, it's gonna slow down. It's slowed down from 30% to around 25%. We're going to see 20%. But we could see it, be around 20, 22% for through maybe 2026, 2027, and then drop into the teens after that. So right now at 6 or 7 times sales, Palantir is, in my eyes, it's relatively cheap. In my mind, it's relatively cheap to its forward, growth and, of course, profitability prospects. Because as the company continues to generate more and more revenue growth, it's going to become more and more profitable. Palantir is one of the most profitable companies. It has remarkable margins. It has an 80% gross margin. 80%. Yeah. That's staggering. I think this company just needs a little bit more time and just a little bit more patience from investors, and they'll understand. And when many investors most investors understand, they jump on the train. I mean, you're going to see the stock at like $20, $25, $30, I think, within the next maybe 1 or 2 years. I don't think that's such high target for this stock.
Well, I have to say you make a very compelling point. I might have to go and look at those financial reports and maybe consider the position.
Or you can just read more articles because I point out all the so you don't. I do all the hard work for you.
Exactly, absolutely. What are your thoughts on Bitcoin?
Oh, of course, Bitcoin. Yes, I'm a long-term bull on Bitcoin. I've been long-term bullish. I continue to be long-term bullish. So if we consider where Bitcoin is now, it had quite a run. So let's just talk about from the recent bottom. I believe it bottomed at around $14,500 about 5 or 6 months ago, and since then it's been it's appreciated by more than 100%. So quite a nice rebound for Bitcoin. Ethereum is in the same boat. So we've seen nice moves in these. Now we're back to seeing corrections because Bitcoin went all the way above 30K, and so I told all of my marketplace members I actually sold my Bitcoin and my Ethereum position around the highs there. Temporarily, I will rebuy. So now we're seeing corrections in these, and we've seen about 15% or so corrections in Ethereum and Bitcoin, and we could probably go a bit further. We could see 20-25% corrections, and then these will be normal here. And I like Bitcoin. I like Ethereum long term. I think that we probably saw bottoms in these also. It's difficult to imagine Bitcoin going back below 15K, even though my bottom end target target was 12,000. So we almost reached it. We hit 14,500. I don't think we're going to go lower than that. It's possible, but I do think that was kind of like the bottom in the bear market, and I do believe that it's possible to retest that level or an area around it. But I think we're going to get some buying interest at around 25K. If that falls through, I'll be a buyer at that 20K of Bitcoin. Yes,
absolutely.
I do like it, and I think it's going to go much higher than that.
Would you subscribe then to the theory of Bitcoin being kind of the digital gold, kind of that long-term store of value?
Yeah,
more of a risk asset kind of just play for you.
That's an excellent question, and the way I'll answer it is I'll say it's something in between.
Well, okay.
because really, to me it is. In a way, it is like digital. I mean, it is like digital gold because there's a finite amount of it. You can't have more than 21 million. It's mineable. Of course, that's not the main issue, but they do mine it. The most compelling thing about Bitcoin is that it is a store of value in a way. It's decentralized. You don't need a parasitic third party, controlling a transaction or taking a percentage of it. So that's I mean, that's the beautiful concept in Bitcoin. It's it's not controlled by a government. It's not printed. It's not minted by a central bank. So it's inflation proof. I mean, it is. So obviously, not obviously, but the fiat money supply it's infinite. It's just the Federal Reserve is very good at demonstrating that because it prints and prints and spreads the dollars all around the globe. But I don't think that this is right or sustainable for the long term. So, and this makes Bitcoin so compelling. You can't just keep minting Bitcoins forever. There is how many there are, and then that's it. If everyone in the world is going to want a Bitcoin, then Bitcoin is going to be worth a whole lot. And of course, you can transact in them now in many places. Even big corporations like Microsoft accept Bitcoin for some services or products. And of course, we know about Tesla, and there are lots of corporations accepting Bitcoin for products and services. So we see that this is not just a fluke. This is not just something like temporary. Many governments have officially declared Bitcoin either a currency or a commodity. But it is classified as something, I guess you could say, tangible. Yeah, and the reason I say it's between gold and something to play around with is because you can't trade physical gold like you could Bitcoin. Of course, you can do ETFs, but it's not the same. And I don't think gold will ever be as volatile as Bitcoin. Even though gold in its own right is a bit volatile sometimes, but it's not Bitcoin. Bitcoin can be very volatile, and it's got a lot of the younger kids who want to be involved, and of course they're influencing the market a lot, and there's a lot of volatility because of that as well.
Mm-hmm. Okay,
but it's the future, so we have to be on the right train. I don't want to be a critic of Warren Buffett, but I don't think it's right when he says Bitcoin is nothing and it's worthless and it's garbage and blah blah blah. Because maybe he doesn't understand Bitcoin. Maybe I don't know why, but I don't agree with people that make comments like that, and I don't think it's right.
Okay, so Bitcoin, Ethereum, maybe in kind of a separate bag, something that obviously is institutionally kind of getting a bit more recognized, countries recognizing it, companies buying it. Any thoughts on the altcoins? Is there any value there, or is that just a bunch of garbage?
The altcoins, so that whole market, it's like the wild west. The reason why I say this is because there are a lot of promising projects that are going to make a change in the future. So there are a lot of functional coins that are, obviously they're worth a lot now, and they're going to be worth a lot more later. However, at the same time, there are a lot of, they're either scams, they're poor, they have poor management, they are poor projects, they are they will be pushed out of the market by better projects, by better coins. That's why I say this, that there's definitely a lot of junk out there. So I mean, anyone investing should be very careful and should do a lot of research before investing in that market.
With that said, is there any old coins that you have a position in that you would be comfortable disclosing? Or
Absolutely, yeah. So I like several projects. One of the ones I like is Link. That's the symbol Link. Link chain, it's called. I like some transactional coins because, again, there's a finite amount, and if the blockchain works well, and and many of these work very well, there are excellent transactional coins like Bitcoin Cash, for instance. It's not Bitcoin, but you can transact with it quicker, faster, cheaper. So I mean, that's one that I own. There's an altcoin out there called Monero, XMR. I'm not sure if you've heard of it, but it's also a transactional coin. It's untraceable.
Right.
So that's the appeal there. It has a secure blockchain, and I see the appeal in using or owning this coin. So I think it's going to go higher. So yeah, these are just a few of the ones that I have positions in. I don't have positions in many right now, anyways, because the market is in an uncertain place, and we may have further corrections in the alt space. But there are definitely some very interesting projects out there that people should keep an eye on.
Yeah, I think you make some good points there. With a lot of coins, obviously, maybe not having that much intrinsic value, but still opening the door to very outsized gains. I mean, I don't know if you saw last week, there was that huge rally in some coin called Pepe coin, which appreciated about 10,000% and minted a few millionaires there. So, that is kind of the beauty of it. But like you say, I think it's obviously a space which is, you have to know what you're doing, right? Or if you're if you're going to speculate some money, that's fine. If you're interested in the technology, that's also good. But you need to be aware of what you're actually
Of
trying to
course.
get here. I mean,
or you get lucky because for this coin, for every one of these Pepe coins that appreciates, by 10,000%, there's probably 100 coins that are gonna be close to worthless in maybe in a year or two.
right. And I mean, there's nothing wrong with gambling. You can enjoy a bit of a fun gambling, but it's not investing.
Absolutely, and people really need to. I think people need to make that distinction that there is investing, and then there's gambling, and then there's also something that we call trading, and we think it's in between, but really, I hate to say it, but trading is closer to gambling than investing. So I want to make that distinction for sure, and for those people who are going to be trading in the crypto markets, please be very careful because unless you're buying and holding Bitcoin and Ethereum, you're probably either trading or gambling, in my view.
Yeah, absolutely true. And with that, maybe just to touch up on this last subject before we wrap up, since we're talking about trading, and how do you feel about technical analysis? Is that something that you use at all? Do you think it's just astrology for men?
No. One of the pillars of my investment style is based on technical analysis. Each morning, we actually go through technical analysis of all the key markets, like the Nasdaq futures, S&P futures, gold, silver, oil, Bitcoin, Ethereum, and sometimes I do some other markets. But every day we go through the technicals on these, and we do this because technicals are extremely important, especially if you want to beat the market. In order to beat the market, you have to, or at least I have to, trade a little bit around the peaks and troughs to trim some profits. When a stock is overbought, and of course, add or initiate a position or dollar cost average when a stock is oversold. And there are many patterns that we watch. Like they do often indicate which way a stock will go in the near term. Some people, they get really into the technicals and maybe even go overboard, in my view, because they start going for everything at once, like Elliott wave and Fibonacci, and then all the technical indicators. That's too much. I respect the Elliott wave theory. I know there are some experts. The Fibonacci, I have a problem with that because depending on the time frame you're looking at, it's going to be all different. So I'm not too big on the Fibonacci. I'll be honest with you. But okay, I understand. Some people are into that. No. My technical analysis, basically, I use several technical indicators like the RSI, the CCI, the full stochastic, the 50 and the 200-day moving average mostly. Of course, I watch the volume and the technical patterns, and basically I just combine that with the fundamentals and the psychological image that's going on at the moment. And basically, we try to combine all three of these together to get the best possible picture of what's going on in markets and how to beat the market is the result that we want to obtain.
I mean, I do a lot of technical analysis as well myself. A lot of people have that expectation that, you could maybe use technical analysis to obviously be able to predict any twist and turn in the market. And that's just not true. I think technical analysis has to be complemented with either fundamental analysis or just a larger understanding of, other market dynamics like the macro moves or, like I said, fundamentals. If someone was interested in looking at your portfolio, where can they find you?
So they can find me on Seeking Alpha. So just look up the Financial Profit on Seeking Alpha or Victor Dergunov. And then you can get full access to the all-weather portfolio, daily updates, and everything else that the service offers.
All right. Well, there you have it. And like I said, it's been great talking to you. Obviously very knowledgeable. And yeah, hope we can do this again sometime soon.
Thank you very much. I appreciate the interview. It was a pleasure to meet you. I'll be happy to discuss some more topics with you. It was a fun interview. I enjoyed it. Thank you.
Thanks again for listening, everyone. You can check out my own profile on Seeking Alpha, the Pragmatic Investor. You can find transcripts for all our episodes on the Investing Experts author page on Seeking Alpha, and links to the investing groups can be found there or in our podcast show notes under episode descriptions. And just to wrap up, remember, anything you hear on this podcast should not be considered investment advice. This is for entertainment purposes only, and you should seek advice from a licensed professional before investing. At times, myself or the guests might own positions in the securities mentioned.